Hi everyone. I'm doing a very quick video just to kind of show how order blocks work in the general sense of the markets. Now, you can trade order blocks in any chart, any visible chart, whether it's indices, crypto, commodities, FX, anything at all, anything that has a chart, you could technically use it in. But for the kind of examples that I have today, I've got two FX pairs, GBP and USD. Two examples which I've traded in the past, in the more recent past, and I've got an example in the indices that didn't quite work, but I'll show you why it didn't work as well. So in this first example, we have kind of USD CAD, and the first thing we're going to look at here is just to kind of backtrack. I'm just going to remove all this pieces of data right as far back to this kind of region here. Okay, so what I'm effectively doing here on dollar CAD is just removing all the pre-existing pieces of information. So the first thing that comes when you're identifying order blocks, you'll generally have it in, well, you can have it in both directions. Obviously, you can have it from the bullish side, you can have it from the bearish side, because that's the way obviously the markets work. They're fluid, they're efficient. If an area has left a particular region very quickly, the odds are it'll probably come back to test it. Now, in this example here at USD CAD, just to kind of go through the kind of the full, I suppose, spectrum of price action, we had a very significant and very clear sell. You can see that there visibly. Price action came down very sharply into a key level of price action. So it's not that it's using technicals or anything like that. You're observing the price action fundamentally. Now, when we get down into this region here, this key level of interest, you can see how the price action becomes a lot more consolidated and a lot more condensed. Okay, you only have to look at the price action with these kind of you have a little bit of a move here, but even if you kind of take it back a step, you've got a little bit of a pump here, obviously a wick that's creating a short-term lower high. You've got price action very much kind of consolidated with breaks to the downside. So you have a wick rejection, price action initially breaks to the downside, then it obviously returns back to the existing range. So that's price action becoming choppy. It's becoming more conducive for accumulating volume, and it's accumulating volume at an area of interest. Okay, so that's the markets, the battle between the buyers and the sellers taking hold. Now, how the order blocks essentially works is, when we have a period of consolidation after a particular trend phase, it happens during the trends, but it also happens at the end of trend cycle, you will generally get manipulation. So it's how the banks actually try and get orders fulfilled into the markets, because the likes of Citibank, JP Morgan, any of these other larger institutions can't come along and say, well, we want to buy 5 million lots of dollar CAD. There's ways in which they have to go about it to not disguise the positions, but water down the positions so they're less kind of prone to moving the markets. You obviously have heard the term moving the markets with order block and on order size positions. So the first kind of clue, generally speaking, with manipulation and order blocks, the first clue that I kind of look for is when we have a consolidation, we want to be making sure it's fluid, it's clear, and it's understood. So the likes of this one here is very easy to recognize, because the price action is moving laterally. We have a little bit of a wick to the upside, we have a little bit of a wick to the downside. So it's fairly clear that the price action is moving sideways. Now, if we look at this price action here, we start to see the price action tick lower, we start to see the price action break down. And what we then see is the price action takes out these initial lows here. So we've got these initial wicks, we've got the body closure, price action's taking this out. So what's happening here is the price action is initiating to the markets that it's looking to potentially go lower. That's effectively what it's saying. And then as a secondary consequence, in the next 4-hour structure, 4-hour candle, the price action elongates that move by taking out this wick and accumulating even more downside. So any of the short-term traders are thinking, oh geez, this looks like it's going to continue moving lower, I'm going to sell it. But that is how prime time market manipulation works in relevance to the order blocks, because what we've seen here is we've seen that initial breakout. So what the institutions are effectively taking a short-term sell or selling positions to try and instigate the sellers into the market. And then at the same time, when that kind of initial move or impulse kind of slows down, they will look to then flip the coin very quickly. So you can see here that they're selling and buying in this region. Sellers is to take out the selling price action, and then they're buying it back up, buying it back up, buying it back up, what happens? We return to the existing range. Price action then breaks back above where the selling was initiated from. So this region here, where the price action actually broke out of the range, and then we continue breaking higher. So what's actually happening here is they get a short-term selling position to initiate manipulation to the downside, but at the same time, they're also buying from this region. So what actually happens is then they buy it with equal ferociousness. Price action moves higher. We're taking out the highs of the order block consideration, which we've done so here and here, and we make that impulse to the upside. So what we've effectively done then in a nutshell is price action has consolidated. They've manipulated the downside by taking the lows, and then they've manipulated the upside by taking the highs. Now, that brings us up to this region of interest here. Now, normally speaking, when they've cleared the lows like this and they've stop hunted anyone who's gone short, they'll obviously look to make that corrective move back to the upside. So as a direct result, the secondary move from here always leads to a downside retrace in a lot of circumstances. In most circumstances, you'll see the price action leading to a pullback back into this region of interest. Now, the reason why they initiate the secondary pullback is so that they can clear their selling orders, okay? So the sells that they took on the breakout can now be removed, and then what they have left over is, well, the shorts have been manipulated. Any of the buyers who've bought this breakout has been probably stop hunted. They have cleared their sell orders from their order books. And then as a direct result from there, we look for the price action to revisit and challenge the region where we saw the initial downside spike. So for that intensive purpose, you've got the 4-hour initiation down here. You've also got another 4-hour breaking through here. So this is the region that you tend to look for the buy scenario. Okay, so as a direct consequence, you have the consolidation, you have the manipulation on both sides, you get the pullback like so. Price action clears out the initial selling orders, and as a direct result, the price action continues moving higher, or in theory, that's what it should do. Okay, now if I take this example here, it doesn't work all the time, but like everything else, it's risk reward. So the risk reward then really becomes a lot more skewed in your favor, because if you're getting a position or a long position down here, like so, even for example, let's just say you take this region here, you can have your stop loss. I tend to cover the body. You can cover the wick if you want on your stop loss position sizes, but I would be looking for kind of a move like this. So given that the price action is sold off, we've hunted the high, we've hunted the lows, we've hunted the highs, I would be looking for a more gradual position back into this region. Okay, now you could even challenge price action coming up here. You could even go higher to a key level if you wanted to, or around 130, but that's probably the safest play, because this is the last bullish candle before the price action starts to initiate the downside trend. Now, if we just speed this up, you can see how the price action literally had no, with absolutely no drawdown of much consideration. Price action holds the level of interest, very, very sharp move to the upside. And that is atypical of what you kind of look for in order blocks. So again, the price actions continue being higher. You could have even ran it much higher. And the similar scenario again. So this is another setup that I'm currently looking at now, is that we've cleaned out, we've cleaned, all of this has been cleaned out because we've hunted, we've broke out, we've pulled back, we've shot forward. But as a direct consequence, when we've made this overarching bullish momentum move, the price action now is going to have to clean this out. So if you look at this price action here, it's not too dissimilar to what we saw here, right? Initial sharp selling will become a little bit more flagging in nature, lower lows, lower highs. It becomes a little bit more cleaner in terms of the price action, okay? Very, very clean, straight line selling, highs and lows, highs and lows, highs and lows. So you can see that the exact same thing now, or very, very similar, is repeating itself to what happened here. So at this point in time, very, very similar scenario, price action, we would look for price action to continue flagging lower. As I said, we just draw out a sample box just for kind of illustration purposes, looking for price action probably to continue flagging in, maybe something like that. Then we'll probably see a little bit of sideways action, hoping then the same thing happens again. Try and break the lows, break the highs, repeat the process, and take it back up here. Now, this time around, you've got, if you were looking for the similar thing to happen again, potentially, now this area here, the next time around, this 4-hour candle here is the area that I want to see get mitigated, okay? Because this is the last 4-hour candle to the downside before we saw that bullish move, okay? So this is the area of consideration that we're looking for the price action to probably consolidate, to then obviously look for a move like that. So you can see here 2 black lines. That was the initial one. This is the secondary one. So the upper one is kind of the new one. So you're looking for the price action to probably manipulate or mitigate. So basically clean all this buy side imbalance out. Start to consolidate like we saw over here, and then look for the repeat process. Now, if that was to play out, you would look then for upside targets. So where's our last bullish candle before that clearing of this short-term range? Well, we've got one here. Okay, we've got one. We've got a 1 hour here that was kind of cleaned out, so I'd probably remove that. And we also have. You could get away with using that one here at 129, but we also have a cleaner one up here around 130. Okay, around 130 is kind of where I'd be looking at. So you could take partials here. You could run the second position into that level again. So from a risk reward perspective, waiting, being patient, spotting the manipulation is obviously so important. And then as a direct consequence, then looking for the impulse, looking for the corrective move, and then looking to carry that along. So you can even see there from a risk reward perspective, 1 to 8. If you carry that into 130, you're looking at a 1 to 30. So it's all about being patient. Now, the one thing that I would say is, how often does this work? Probably, I see it kind of working quite a bit in different markets. Now, to give an accurate number is quite hard. It's probably, I would probably say it's probably in the around about the 50-55% mark if I was to kind of give a guess. But the massive profits that can be made utilizing order blocks is in the risk rewards. Okay, identifying your structured areas of interest, your lows, your highs, identifying the trending price action, identifying the short-term consolidations, your trending price action, your manipulated moves, and then as a result going from there. All right. So that's USD CAD. If we take a secondary position here at GBP USD, now GBP USD is one that I took this morning, and now whether this plays out or not, let's wait and see. Now, the reason why I took this one again on GBP USD was the fact that, right, if we just kind of elaborate this and kind of elongate the move, obviously bullish price action. Well, if we start off at the kind of the highs, bearish price action, bearish sell-offs. If we go up to the daily, you can see how the price action has consolidated. We've got a 4-hour up here. You also have a daily candle down here. Price action, very, very sharp decline, very, very sharp sell-offs. Obviously, straight line. We then pause, get a bit of consolidation. Price action then makes another impulse to the downside before we start flagging back to the upside. Now, the only thing is I would be saying that might invalidate this short-term buy setup is the fact that we could potentially come down and grab some of this order flow down here between kind of 123.50 and 123.80, 124. So there is the chance that, yes, price action, since it's taken out these lows, again, we've consolidated, we've taken out the lows, we've taken out the highs. So yes, even though I've taken a short-term position this morning, it is risk-free, so there's nothing to be lost. If it continues selling off, it's just going to take me out of break even, and then I'll just wait. Okay. So in this position here, as I said, we've consolidated, we've taken the lows, we've then very, very swiftly broken back up. We've come back into this range of interest. So this is a daily range that I've kind of found way over here. So if you go back over to where we were over here, you can see that there's a daily order block candle over here around 123.40. Now we've come back down, we've mitigated that, we've even broken through, and now we're starting to correct to the upside. Now on the cable here at the moment, yes, we've seen short-term bullish price action. Yes, we have. Price actions come back down to this consolidation here in yellow. Now, yeah, we could very easily break through these lows where this wick is and come down and come to grab this 4-hour, or we could maybe try and come down here. It's a possibility. Absolutely. You have to be fluid within these markets. Now, the reason why I took the long here on GBP USD is I identified, right, price action is topped out under what, 126.50, 126.60. We have flagged lower into this consolidation. Now, normally speaking, if we go into a consolidation like this and we take the lows first and then we take the highs, that's indicating that the price action should, in the majority of circumstances, go higher. So when we take the lows, then take the highs, we come back out, it should look like that. Okay. Again, similar scenario. If we were to take the highs, then we take the lows, we flag back up, we then move lower. Okay, so they're the general two runs on the order block that I look for. Now, in this case scenario here, we're range bound, we take the lows, we reverse very, very quickly, literally comes back up. So the traditional retailers would be looking for sells here on the retest, didn't quite work. Price action broke through back into the yellow range. We've bolted higher. Okay, we've bolted higher. Probably there's been some sort of fundamental catalyst aligning with this. So they tend to use the moves as the catalyst to kind of disguise the order blocks. Well, I've noticed that quite a lot. So what we've done is we've taken the lows, we've taken the highs, we've flagged back down. Now, again, using the 4 hour, using the 1 hour, I can see that there's been a hunt here, obviously with the wick, and we have a 4 hour candle here. As such, 124.94. And if you go down to the 1 hour, you can also see that there is obviously this hunt, and then the price action has another 1 hour candle here. So if you're going off the fours, you're around about 124.95. If you're going off the 1 hour, you've actually got two. You've got this one here, and you also have this one here. So this is the breakout move, and then this is the last bearish candle before that bullish impulse. Now, look how the price action this morning has flagged lower, perfectly back into this region. We've literally hit this to the point. Okay, we've literally hit the region to the point. Now, you can either place limits, you can either work off limits and sell limits and buy limits if you want, or you can sit and set alerts and watch how the price action performs at that region. So I tend to actually do that more often than not. I tend to wait rather than just selling, because sometimes, for example, there was one yesterday or the other day in euro pound, and if you had to set a limit, you would have got stop hunted. Whereas I actually just observed the price action, and then I watched the candle closure, and it broke through and it continued selling off. So I avoided a loss because I didn't sell a limit. Now, the thing is, on this one, this morning, I actually got in around about 124.96 was my buy. Okay, so I was a little bit late to react. But again, watching, you can use your kind of lower time frames as well. But when you see the price action coming down like this, wick rejection, then we start to move. It was in kind of this area of interest that I had bought this morning. So at this present time now, as I look at this chart, I have taken a long position, as I said, roughly around 124.96, 97, and I've just about covered. Now, you can either, again, when you're covering the stop losses, you can do the full move of the manipulation hunt, or you can do the shorter term impulse. Now, this one this morning, I've actually taken the shorter term impulse as such. Okay, so again, I'm getting in fairly nicely, fairly tight in terms of the risk rewards. And at this point in time, I have my TP on this one way back up in the 4 hour, back in this region up here. Okay, so there's a region up here around, you've got a region here at 126. You also have another one up here around 136.30. So again, from a risk reward perspective, you're talking 1 to 8, 1 to 9. So you could always dilute or whatever if you wanted to. But that is another good example of how the order blocks work. Okay. Again, there's actually another one on the Aussie as well, very, very quickly. It just so happens that there's some of these playing out as we speak in the Aussie pairs. So the Aussie pairs at the moment, again, this is kind of an order flow price action move. Okay, so we've higher highs, higher lows, price actions continue to trend higher. We've got a consolidation move here. So price actions consolidated. So we've kind of taken the lows, we've taken the highs, we've kind of taken the lows again. So it's manipulative, and then we get the impulse. So again, using this as your initiated move, you've got a hunt down here on the wick. Notice how we wick reject, bullish reversal, price action takes out the highs. Again, last bearish candle before the bullish impulse, and the stop hunt is here. Draw your line across, mark out your level of interest. The price action flags back beautifully. Okay. In 1, 2, 3, 4 times that we came back to this region, notice how the price action never closed underneath that 71.50 level. Okay. Or even here, any of this region here. So again, you can see it here. Price actions flag lovely. We know with the RBA as well, massive wick to the upside. Price actions, double mitigation on the lows. We rallied again, back in, and now we're mitigating again. So the Aussie one is a little bit more kind of choppy because the price action is still kind of hanging around this region, which makes me think that it mightn't just work as cleanly as we'd expect it to, because normally speaking, if it does this and then does a double one, it'll most likely more often than not go in this one. If it doesn't go in this one, then it could be a little bit of a straggler. Now, again, here again, what happened? Price action, same time, comes back into the region again, and has impulsed again off it again this morning. So it just shows the kind of the prevalence and how useful this can be applied. And as well, it's very useful for spotting punts, stop punts, reversals, very, very sharp reversals from an order flow perspective. Now, there's one other example that I'm going to show you. And it's the S&P one as well. So it happened on the S&Ps. So if I show you this chart here, S&P's way back down here. Okay, so I have to go to the 4 hour. Okay, so price action here on the S&Ps. Okay, you can see trending price action, lower lows, lower highs, lower lows, lower highs. What do we see down here? We've got initial low, price action creates a new lower high. We come back down to test it. Okay, we've come back down, we've pretty much engulfed this wick. Price action's consolidating at this lower end, 38.60, 38.50. But look what happens. On the 4 hour, break, 4 hour, impulse. Okay, so again, the price action is doing it here in the S&Ps. Okay, you can see it here very, very quickly. The 4 hour is probably a little bit cleaner. Very, very sharp bearish order flow down to the lows. We break out, we reverse back into the range. Price action then, what does it do? Takes the lows, takes the highs, comes back to mitigate the level that it broke from. So this is where it started to initiate the selling. So this region here, now ideally speaking, I would have liked, and I've even got it marked up in yellow, to come back to this candle here. This 1 hour candle here, as such, would have been the absolute optimum entry point. Now, as we can see, it came down very, very close to it. Okay, so within about 7 or 8 points from it, and it's obviously bounced off it. So again, that's initiating how the order blocks in a general sense. Sometimes it'll come into the region, but it mightn't just hit it. So sometimes it'll fill the imbalance. So the imbalance is obviously the trending price action. Sometimes it'll hit it exactly to the zone. So this is why I use alerts more so than limits, because sometimes it'll blow through it, sometimes it'll come slightly short. So using alerts and get notified fairly quickly means you can pop on real time, assess the price action in real time, and then evaluate, is there overriding fundamentals that could potentially take it lower, or does it look like it's going to hold a position? Now on this one, I was patient, I waited for this one, and I ended up missing it. But on the higher time frames, you can see how the structure was fairly clear. Okay, so yeah, we had that 4 hour break, then we had the 4 hour back in, we took the highs, we flagged back lower. So if you're going off your 4 hour order blocks, you'd be actually looking for entries here, you'd probably be covering the body down here, and then you'd look for long. So if you were looking for a 4 hour move, it would be probably, let me see, there's the 4 hour, there's your body, but you are talking a massive stop in the S&P, so it's probably not worth it from a risk reward, and even taking a higher doesn't work. So I suppose being patient and waiting for that 1 hour wick rejection was obviously what I had done, but it just didn't come off. Now again, second to that, you can also use your fibs. Okay, so when you're identifying the order blocks, the hunts and the highs and lows, you can also use your fibs. Now, broadly speaking, you shouldn't be looking for any less than really a 61.8. Generally speaking, 61.8 is your minimum, but your optimum discount zone is really between your 71 and your 78, roughly speaking. Okay, now on this one, it didn't obviously hit it. If we go back to the cable one, or even the USD CAD, I think I hit it on USD CAD. If I go back over here, you can see it here, it hits it perfectly. So in this one, you had multiple confluences. So you had the hunted lows, taking the highs, flags back down, takes the fib levels, mitigates the zone of interest. So you had multiple confluences in there. On this one, GBP USD, similar scenario again, 61.8. It actually came to around about 71. So six, no, sorry, it didn't. It came just below the 61.8. Apologies. So that was a clean one as well. It's looking that it's probably going to try and come lower. I wouldn't be surprised if this stop me at break even, because the likelihood is that price action is probably going to try and come lower. But if it does, it does. Let's just wait and see. Let's just wait and see how this one reacts. It's just about more often than not, it'll work, and you'll get the risk rewards in your favor as well. So there's a couple of examples there. We've done actually 3 or 4 examples of different scenarios, different elements that can play out, and then it's just a case of running that position. So here, 61.8 rejected it to the pip, realistically, and then shot straight through, took out 276, took out 61.8, took out 1272, pretty much. So it's taken all 3 fib extensions. Now we're in consolidation. So again, We're consolidating up here, either looking for the lows to be taken, look for the highs to be taken to give us a hunt, give us a move, and then we can start to play around with things. Okay, gold is another example. Okay, gold flag lower, bearish trend. I'm just going to clean this up on gold. Right, let me just take this. This one here is another one on gold. Bearish. I'm just actually going to replay a lot of this. Okay, so gold, bearish trend, bearish order flow, drive 1, drive 2, drive 3. So we've got a 3 drive pattern in here. Okay, so sometimes that will play out as well. Price action takes the lower highs. Okay, we've taken it out. Lovely. That's step 1. Price actions come all the way back down to this level of interest here. Now, this I had done this on the 4 hour. So if I pop up to the 4 hour, you can see that, right? Look, 4 hour, last bearish candle, price action break structure. So it's broken the structure here. We flag back down. We've met it to the point, and now the price action's rallying straight through. Okay, so at this point in time, you actually had 2. Okay, so we actually had a secondary one over here as well. Okay, so if you look at this, this is the first one. If you missed it, you could grab the second one. So even here, looking at the 1 hour, last bear candle before the updrive, we've broken this internal structure. So this is internal high, okay, our internal structure. Price action's broken through. We flag back down. We're taking it, okay. So another, this was one that I'd actually longed. I'd actually gone in here at 1811, literally no drawdown at all, and I ran it all the way back up into this region up here, kind of 18. I actually took profits here around 1854. So this candle here was where I actually got out. I took that a couple of weeks ago. So yeah, worth. Look, it can be easily applied. It just takes a little bit of patience, a bit of back testing, and obviously time on the charts. So that's pretty much it. All right.